Let's look at the after repositioning valuation. This is from the previous video, the introduction to repositioning apartment buildings. You can see all of the financing terms and the structure of the debt. Now let's calculate the ARV. We start with the debt coverage ratio, the annual mortgage constant, the loan-to-value ratio. Calculate the debt yield, 15.4632%. This is a very safe debt yield for the lender. We then calculate the debt present value. We take the net operating income on the pro forma and divide it by the debt yield. This calculates the debt, the refinance debt. We also calculate the cap rate as 10.82426%. The after repositioning value is the net operating income divided by the capitalization rate. Now here's the repositioning financing. Now that we know what the ARV is, we want to determine what the maximum offer will be based upon the private debt parameters. So let's calculate the maximum allowable offer. Membership total funds, MTF. This is the amount of money that the common equity investors will invest in this deal, including escrow debt reserves, equity investment, and syndication premium fee. On the previous slides, we calculated the refinance debt present value to be $1,272,748. That's 70% of the ARV. That is the exact loan-to-value ratio that commercial lenders like. We then subtract the refinance debt closing costs, which is approximately 3% of the debt present value. This percentage can change depending on the refinance lender's requirements. This leaves the refinance net cash out $1,234,566, a statistical oddity. Then we subtract from that cash out to recover the equity investment and a profit margin. This is calculated as 155.15% times the membership total funds divided by the ownership equity of the investors. They will own 60% of the property. The syndicator will retain 40% ownership as part of the syndicator's compensation. Therefore, to return 155% to the investors, we multiply the MTF by that percentage and then divide it by the ownership percentage. Once we subtract that number, we have what's left over to redeem the repositioning debt future value. This is the balloon payment due to the private lender in 12 months. Therefore, we'll have to calculate backwards to determine the repositioning debt present value. And here are the parameters from the previous video. Therefore, we calculate the first position private debt present value at $855,444. We subtract the 5% margin, which is an incentive fee, origination fee, discount points, whatever you want to call it. I call it the incentive fee, to arrive at the net proceeds from the private lender. And we are saying that this is a 90% of the investment to value. The common equity investors will be investing 10% ITV towards this investment to value, plus additional sums for the debt reserves and the syndication premium fee. We add in the private equity investment of the remaining 10%. Total investment to value $902,972. This is less than 50% of the after repaired value. This is a very safe investment for the private investor and the common equity investors. We subtract the total repositioning costs that we calculated before to arrive at the maximum allowable offer, $775,972. This is how much the property can afford to pay given the basic parameters of the private debt and the refinance debt and the 155% return to the common equity investors. And this is the membership LLC summary from the previous video, showing that the total funds $149,748, and the ownership is split 60% for the common equity investors, 40% reserved for the syndicator, and that also applies to the repositioning cash out. 40% of the cash out on the refi goes to the syndicator, 60% goes to the common equity holders, the investors, which represents 155.15% returned to the common equity investors after 1 year. There's still a positive cash flow with 30% retained equity, and that represents an apparent return on equity of 10.82%, but the yield is actually infinite because the common equity investors have no net cash invested. Accredited investor. We went through this in the previous video. I'll repeat it here. Accredited investor qualification. You must meet at least one of these criteria. Number 1, I received an individual income in excess of $200,000 in each of the 2 most recent years and reasonably expect an individual income in excess of $200,000 in the current year. Or, number 2, my spouse and I received joint income in excess of $300,000 in each of the 2 most recent past years, and we reasonably expect joint income in excess of $300,000 in the current year. Or, number 3, I have an individual net worth or joint net worth with my spouse in excess of $1 million, excluding my net equity in my primary residence and excluding any secured debt above the fair market value of my pledged collateral. If you satisfy at least one of the above criteria, then you are an accredited investor. Congratulations. Always consult with your attorney and accountant before deciding whether to invest. If you choose to invest, then your funds must be delivered to the escrow agent within 5 business days of receiving notice to commit. These are hot properties. They're distressed. These are all cash offers being made on properties. We must close quickly. Otherwise, we will lose the deal to someone else. This is a very competitive business. All projects are oversubscribed, which means that the syndicator raises more money than the required amount. When the project closes the purchase, any excess funds are returned in chronological order to the investor without offset or deduction. So if we, in this example, accumulated more than $149,748 in subscriptions, and we closed on the deal, the excess amount would be returned in last in, first out order. If your money is returned, you are kicked out of the deal. If you deliver your funds late, then you may be refunded and you will lose the opportunity to participate. Time is of the essence. When you are notified to commit, commit as fast as possible. Sophisticated investor. Please understand that there are some situations where a financially literate and sophisticated private financier may work with us without qualifying as an accredited investor. Our attorney can work with your attorney to determine whether and how you can work with us as a private financier. Such situations usually involve non-recourse private lending with secured debt on the subject property, or possibly a private loan to our LLC as a general obligation, that is, an ordinary unsecured business loan. Such opportunities must be evaluated on a case-by-case basis with attorneys to ensure proper compliance with all applicable laws and regulations. You may contact us and ask for more details on working with us as a sophisticated private financier, and be sure to include your attorney's full contact information, because we must include your attorney in all correspondence. Absolutely no guarantee. I cannot and will not guarantee any kind of return on your investment or even the return of your investment according to the rules of the Securities and Exchange Commission, the SEC. I can assure you that you will know everything that I know about the project. I only focus on projects where my private financiers can reasonably expect double-digit returns. Just be sure to let your own legal and accounting advisors review each project to advise you on the merits relative to your own situation. You can get more information from our website at www.smithsyndication.com. I hope that this video has been educational and informative to you. This has been Repositioning Analysis for Apartment Buildings. My name is Jeffrey Smith, and thank you for your support.